Hey, what's going on? Congratulations. You're on your way to success. You already are successful, I know, but you're on your way to your next level of success. So listen, great call. This time, what I'm going to be doing just before the business plan, make sure you really understand like why you're building this business and why you want to be a business owner. There's some key elements you need to understand in the mindset of a business owner. And I'm also going to share with you my personal results on what I'm getting from this. So you know that this is 100% for real, that we're here to help you. This does work. You got to do the work though. So I'm going to prove to you my results as well, the kind of incomes that I'm making as well. So I'm sure you want to see that, right? So we're actually, the coaches here, especially me, I like to prove myself that, hey, this is something that works for me. It can work for you. We're not just giving you a bunch of lip service. Okay, so here we go. I'm going to share my screen with you and show you some of the key points in learning about assets and liabilities. So here we go. Share screen, and it should be coming up. Okay, great. So let's move this down a little bit here. Okay, so you can see here, this is as far as down as goes. Oh, here it is. Okay. On the left and the right. So assets and liability. Let's talk about business. When you're starting a business, there's a term called assets and liabilities. Assets are something that appreciate in value, and they also generate cash flow every month or every week, however you structured it. So in a business, for example, you can buy a business. You can be in an office space. You could have a warehouse business. You could have a business that does transportation, or you could invest in gold or crypto, whatever you want. Those are all assets. But this one here, at the bottom, kind of in the middle here, it's the internet business. And for me, and for most people here, this is the best assets you can have. I'll give you several reasons why. Number one, for example, if you had a business, you can go out and buy a bricks and mortar business or start one. It costs thousands of dollars. We'll show you that in a minute to start one of those, hundreds of thousands of dollars, some of them, right? And then the thing is, you have to be locked down to it. You have to physically show up, do the business, work in the business. So you're still like a job. You still have an asset. Yes, it's appreciating, but it's not giving you as much time freedom like an internet business might do. Now, gold and crypto and all these other stocks and all these other assets you can purchase, yeah. But the thing is, they get locked in. They're not driving cash flow every month, right? So it is appreciating, hopefully, and you lose control of it. You can't really work in those type of businesses because they're just sitting there like an investment. Now, here as a warehouse, you can have that as well. It'll require a lot of space. Yes, it increases in value, but you're kind of, open to the economy, how it would affect your business. And also having, let's say, a transportation business or something you buy as a truck or a car and you use it for business. Yes, it goes up in value, but you're still tied down to business. You're working in the business still, right? But on internet business, you have three things. You remember we talked about this in our first call: financial freedom, time freedom, and location freedom. Well, financial freedom, because it's very lucrative. You see, it's in a growing industry, so it's going up in value. And number two, it's time freedom because you don't have to physically work in it 8 to 10 hours a day. I only put in like 4 or 5 hours a day, and I produce a six-figure income from anywhere I'm at. So that's why it gives you location freedom as well. Now, liabilities are something that when you buy, they go down in value. Yes, you get to enjoy the nice cars, but from a business standpoint, making money, not a good choice. You should buy liabilities only from the income, passive income, this side that assets are generating for you. And the thing is also, these can go down in value because the thing is, you never know about gold, or eventually it takes a long time to make money in those type of investments. And also, if you buy things for your house, like furniture, things that go down in value. So it's not a good idea to spend money on that, especially if you borrow the money. And I'm going to talk about that the next slide. Also, taxes. Here, there's no tax write-off because it's not used as a business. Here, everything becomes a tax write-off in the business. So think about it. Any investment you make, you get a percentage of that from the IRS giving back to you. So the real difference between assets and liability, let's read this: property or object that are owned by a company to produce revenue. That's one of the keys is producing revenue. That's your friend. That's going to pay off any debt you might incur or operating costs in running a business. Liabilities is the amount you owe to the third party that are seen as debt and are paid within 1 year or over the long term. It depends. But let me show you some income statements, how they should look like. I'm going to come down here and show you this. So there's three classifications of people: poor, middle class, and the rich. Obviously, we want to have you thinking like you're already in the rich mindset. But the poor, you understand, it's whatever income you're making, you're paying it off on the expenses, and you're making in whatever you have, paycheck to paycheck. Here, most people come into this category when they're starting and thinking about starting a business, because you can use some of that money to put it into your assets. I'm going to talk about that here, but most of the time you're getting income, you're paying off your taxes, your mortgage, your car payments, all that stuff. And these are all liabilities, okay? But it's not generating any asset. You're not putting a percentage of your income in an asset column. This is what the rich do. In fact, I recommend taking 10% of your income, whatever it is in your job, store it on the side, off the top, put it in an asset that's going to generate an income at a higher percentage. This business could be the answer. In my case, that was the case. So let me just show you some of the things that you'd be looking at. If you were to go out and buy a business, let's say, or let's say take over one, okay, let's just go here, this website. This is one of the most common websites that people go to when they want to buy or sell a business. So if you take a look here, let's just go into this column, boom. Let's search for business. There we go. Okay, I just happen to use Georgia. And let's say I'm going to put some filters on it, meaning well, let's focus on businesses that from a profit standpoint, what we want to make, or a cash flow standpoint. So we want a business, let's say your goal is to make at least $100,000 a year to, let's just say, 200,000. Okay, it could be more, but let's just say that's what it is. So I'm going to apply the filters. These are the type of businesses, not type, but the numbers that I'm looking at. Okay, so here you can see on the right, this is the price of the business that they're asking for. And you can see underneath the cash flow is 150,000, not bad. But you have to analyze the numbers. How many years would it take you if you were to maintain a $150,000 cash flow or profit to make up your investment? 700,000, which is, this is about what, 6 times, 5 times, right? 4 or 5 times at least. 4 or 5 years it would take you to make that much, unless you grow the business rapidly. So that's a pretty much, a tall order. Look at all these other businesses. Here's another one, dry cleaning champion here. It says, look, 339,000, almost $350,000 business. Yes, the cash flow is nice, 168,000. But I want you to think about this. These people that buy these businesses, how much do they make any profit at the end? Not that much, because they have to borrow this money, most of them. Imagine the mortgage or the payment on the $375,000 loan, right? And your cash flowing is 120,000 a year. Think about it. So when people come in here and they look at getting started in a business, they don't sometimes see the contrast of what it is to start a company. It takes time, right? But let's just say you borrowed money to start this business. Let's just say you borrowed $50,000 or $60,000 or even $20,000. Is that good debt or bad debt? You guessed it, it's good debt. Why? Because it increases in value, whatever you purchased, and it generates a cash flow every month. You saw that from the projections which Bo showed you in your previous videos. Bad debt is going to be something, even if you borrowed the money, and let's say you want to go on vacation. Yeah, that's nice. But 2 weeks later, after you come back from vacation, the vacation's over, you're still paying your debt, right? That's why when people purchase cars or furniture and they borrow money for it, I don't think it's a good idea because of the fact that it's going to go down in value. But if you borrow, let's just say for a business for $30,000 or 50,000 or 100,000, and it's making you enough to pay it back within 1 year, that is a good investment, in my opinion. So I'm going to show you a couple of things here. This is Robert Kiyosaki telling you this. It's called the cash flow quadrant, actually. You might have read this book, and if not, I highly recommend you check it out. Here, people are trading time for money, self-employed, and we went over this maybe already, but I want to illustrate a point, is that here, you're using leverage from other people's expertise. You're actually kind of buying your way to success almost, if you want to think about it, okay? And that's why people get into this type of business scenario, all right? So anyway, if you want to look at this, you can answer these questions, but let's go and have you start watch the next video. So I'm going to stop sharing screen, okay? So right after this video, you're going to be led to that screen and you're going to watch 3 videos. One is Simon Sinek talking about the why you should build a business and what's important, how Google made it and Apple and all those companies. The second is a little bit long. It's the movie The Secret, where Bob Proctor and many of the motivational speakers talk about the mindset. What you think about is what you attract. And the last one is about Robert Kiyosaki illustrating these points that I just mentioned from his perspective. Okay. So I'll see you on the next call and we'll start the business plan. Take care. Bye bye. Oh, before we go, I'm back. I wanted to share with you my experience on what I've been able to achieve. Just recently, this is the typical average. So I'm going to share my screen with you and show you and our Slack channel. Okay, so I'm kind of opening the curtains here for you guys a little bit, and let me share my screen again. Okay, so just recently, you can see here. This is what now these are people that have gone through the system that we have converted that wanted to buy the high ticket program. That you saw some of those commissions. You saw where Bo was showing you if you made 3,250 all the way up to 10,000 per sale. These are some of the commissions that occurred in the last 2 weeks. You can see these here, okay? And you can see the refund rate has been very low. There's only been two refunds, which are for 300 and one was for 400. But the rest of it, this is our total commissions. Look at that. 85,350 total sales in my business. 8,500 was my part of it. Okay, this is what I'm talking about. Is that imagine in your business if you made 85,000 in 2 weeks. Obviously, you're in a different percentage of commissions, but you can see that this is working, and you can see the dates here. Okay, so all real stuff. I know you guys can do this. I'll talk to you in the next call. Take care.